Jeremy, tell us first about the overall impact that you've seen play out when it comes to the pandemic, the lockdowns, the economic downturn that we've seen on your business.
So initially, good morning. Yeah, we saw this big supply shock initially going back just after Chinese New Year, of course, in China. And as that evolved, we saw inventories tightening up elsewhere in the world where we were sourcing from China. And then, of course, the health situation became more under control, and therefore we saw production coming back. And actually, March was not too bad for the container shipping industry because we saw those exports pick up. But then it quickly changed into a demand shock story, as we all know, particularly with North America and Europe, Latin America, even Africa starting to look at backing up inventories. So we've naturally seen a slowdown in bookings, particularly in those products where the supply chain is impacted more by footfall and more impacted by non-online sales activity. So that's manifested itself really, you could say, in terms of Asia exports out of Asia. We've seen about a 20% drop down in terms of bookings during April. And we expect that to continue now through into May. And it's a little bit too early to say in June, but our expectation is probably June is going to be around that ballpark as well. But of course, we are starting to see now the lockdown gradually being lifted in certain localities in Europe and in North America. And we are starting to see manufacturing production coming back again. So we would expect July and August to see some further pickup in overall demand for container shipping.
Jeremy, there's been lots of debates and conversations being had about what global supply chains will look like. Some people saying that you perhaps see disruption in terms of these supply chains and logistics becoming more localized as a result of this pandemic. Is that something that's within your expectations, that there will be permanent structural alterations to shipping, to the way that global trade is conducted?
Well, of course, as we know, during 2019, we faced the US-China trade tariff dispute. And that already had many executives and many supply chain statisticians looking at what they wanted to do to try to mitigate risk in the supply chain. So we've been seeing a slight de-risking on anyway in terms of having all your eggs in one basket in certain particular locations. So China has been edging down in terms of its overall significant part of the supply chain mix. So we have seen more activity out of Southeast Asia in terms of sourcing. And one key part is, of course, the drive, an increasing move towards online retail back in the North American, European, and even here in the Asia market. So the online retailers are doing very well through the digital channels. Anybody relying on footfall, anybody on the bricks and mortar model still is very challenged as well. So those two dynamics mean probably sourcing from more countries in the future to de-risk in terms of over-reliance on one particular location. And secondly, probably more online sales in the future. And actually, that's quite good for our business because what that does is it actually steadies out the flow of the inventory rather than having these quite big seasonal peaks built around particular, malls and shopping activity at certain times of the year. So online is much more of a more steady flow. People buy when they want and they get it delivered when they want rather than waiting for specific shop hours or particular seasonality.
If you think that trade will become a bit more widespread around the world, perhaps not so much focused on specific destinations, then is your business logistically positioned to counter that type of demand in shipping?
Yeah, so as Ocean Network Express, or One as we call it, we're in 130 countries in the world. So the overall COVID-19 development has obviously had an impact on our business depending on what the health situation has been in that particular country, the government policies, but also in terms of that economic curve we were talking about in terms of lagging effects due to the health issues. So we are well positioned to cover imports and exports out of all of those different locations and countries. And while I've talked about export demand, particularly out of Asia being down by about 20% during May and June potentially, what we are seeing is that the actual imports into Asia are still holding up very well. So exports out of Europe, North America, Latin America, Oceania are holding up well because particularly a lot of those products are related to foodstuffs, reefer cargo, generally grocery items, household effects. And actually those are holding up pretty good because the consumer in Asia is still doing very well in terms of purchasing.
And yet the outlook seems so uncertain. Jeremy, how is Ocean Network Express staying nimble? Are you taking any measures on costs?
Well, so what we're doing is we're flexing our capacity in line with that demand. So we're staying very close to the customer. We're looking at booking forecasts going forward. And typically our customers are making bookings 4 to 6 to 8 weeks out. And that gives us a little bit of lead time to be able to flex our network. So, for example, we have 10 services from Asia to Europe, or we have 16 services a week from Asia to North America. And what we can do is just flex down on those number of sailings. So at the moment, instead of maybe having 8 services a week from Asia to the US West Coast, for example, we flex that down to 7 and even down to 6 in some weeks to flex into that particular changing demand situation. And then we can bring that capacity back online in a relatively smooth way as hopefully post-COVID production picks up.
Jeremy, we're just hearing in the last sort of few minutes or so that China has put a ban on a number of Australian producers of beef, and by some estimates it's up to 35–40% of total exports. Is there a concern that as we continue to see again a renewal of tensions between Beijing and Washington, between Beijing and Canberra and other trading partners, that your industry will be impacted by another round of the trade war?
Well, first of all, we always like to see international markets as open as possible and be able to move products for our customers as openly as possible. But we are realists, and these developments have been a facet of our industry, particularly over the last couple of years. I think, though, at the end of the day, the product will still move. The origin may change, but the final volume requirements into the destination markets will still continue. So last year in 2019, due to the US-China trade dispute, yes, we saw a fall in US exports to China, for example, particularly of a lot of those agri-products and proteins that you're talking about now being impacted in terms of Australia. But we saw a pickup in instead sourcing out of Latin America and out of Oceania, actually, and even out of Europe as well. So I suspect that the product will still keep moving, but we will just have to be more agile and flexible in terms of adapting our equipment inventory and our capacity on the deep sea networks to still move the product to the final market, even though the origins may change slightly.